So good morning, everyone, and welcome again to the Tradeshift Sanctuary. We have a very esteemed panel here that's going to walk us through the edge of centralization as we sort of transition out of the industrial era to a new sort of more distributed, decentralized era, if you will. So we're going to kind of dive into that here today. So my name is Stanley. I am the live journalism editor at CoinDesk. I'm joined to my right by Gert Sylvest, who is the co-founder of Tradeshift, by Yorke Rhodes, who is the co-founder of Microsoft's blockchain practice, and Mark Foster, who is senior vice president at IBM Global Services, and Greg Medcraft, who is the director of the Directorate for Financial Enterprise Affairs at the OECD. So we have a great panel of kind of regulatory and business perspectives here that we're going to be discussing, diving into. And so I just want to kind of set the table here by, when we think of the industrial era, we think of, centralized structures and business models and, centralization of risk, centralization of capital was sort of paramount to success. And as we kind of transition out into this new, more distributed era where it's really more about agility and collaboration and kind of network effects, really just kind of want to get some perspective from folks about where are we in this transition, transitioning from the edge of centralization to a sort of a new model, if you will. Gert?
That's a good question. So I guess digitalization has really created change everywhere you look. So I think it's a number of major trends, but maybe the biggest one are on the financial side of things. So that encompasses anything from the trends of e-commerce that basically allows you to set up shop one person and engage in global digital trade from almost day one, to trends of crowdfunding, what we've seen lately on blockchain with ICOs, but also marketplace lending, anything that kind of challenges traditional ways of getting access to capital for small and medium-sized companies. But I think it's also as much in the way that we work. I think a lot of enterprises, when you speak to top-level leadership, are not familiar with how the way that they actually create software has changed from centralized models to decentralized models in just a few years. And I think the mindset that young people come with when they join enterprises today is typically one that is totally different from just a generation before in terms of how they perceive authority and how they like to make decisions. So I think it's a very, very broad trend.
Sure. Yorke?
Yeah, I think e-commerce is a great way to look at this because we've been trying to get e-commerce right since the 70s, basically, right? I think you mentioned earlier is like EDI, as an example of a peer-to-peer technology that's supposed to make e-commerce and commerce more efficient, really is sort of a massive market failure, right? In terms of how that technology was penetrated the market. So where we are today is sort of an advent of two things. One is efficient markets are created by having central places to go, and the technology was built to support centralized, efficient markets. So the change in how we think about security and identity and stacks of software, particularly around things like open source, starts to change this idea that you need to create a single central proprietary marketplace to actually get those efficiencies. So I think there's a lot of underlying elements that are really contributing to this opportunity, along with the social elements where we're starting to say, we really need to put the opportunity and the power and the value back into the hands of the individual participants in a value chain and not in large marketplaces where they're carving off 30% of an Uber trip, for example.
Sure. Mark?
Yeah, well, it's interesting. I think we're seeing a bit of a dichotomy, actually. I mean, I think certainly all the new technologies like IoT, like blockchain, like AI, like automation, things that are on the edge are allowing people to have different business models. And we're certainly seeing, therefore, virtually every organization, no matter how large it is, now operating with design thinking, with agile, trying to find new ways in squads and scrums and various different ways of working, with a more decentralized model of operation, no matter how big or industrial it might have been in the past. And yet, in a way, also, we're seeing, in fact, a rise of new platforms as a business model. And a platform you could describe as almost like another form of centralization. It's a different kind of centralization. And I think one of the things for us to maybe just spend some time on as we talk is actually, are we just seeing not necessarily a move from centralization to decentralization, but a different way of that paradigm playing itself out in a more technology-enabled world?
Sure. And Greg, from a capital formation perspective, I think what we've witnessed over the last couple of years is really the growth of token offerings, and this has quickly become sort of a distributed global phenomenon. What was once a kind of easily cordoned off, centralized sort of practice that governments could sort of wrap their head around. How are you seeing this edge of centralization play out from your position?
Well, we've just published, as you know, a report on ICOs and looking at them for capital raising, so I'll mention that. But thanks for convening today's discussion. There's two observations I'd make. First of all, that centralisation is actually increasing by some very important metrics. And then secondly, that despite that trend, we're seeing more demand for decentralised products, services and business models, a little bit the comments of the others, Mark, Yorke, and in particular with blockchain, DLT, IoT, and now we've got the means to do that. So you've got two interesting trends. If you think about it on the first point, some recent OECD research has actually shown that the number of companies within a market is actually been decreasing in many different industries, okay? Greater concentration and centralisation is the trend in many parts of the world. A little bit to your comment, Mark. And particularly in North America and Europe, it simply means that economic activity is actually being centralised into fewer and fewer hands. And while the drivers behind it are not really still understood, and we're going to do some more research in one of my areas this year, at least part of it actually is the increase in industries that are now data-driven and beginning to take on characteristics of digital markets. But digital markets tend towards naturally concentration, particularly because of just strong economies of scale and scope. Secondly, we all know network effects, right? And thirdly, reliance on big data sets. The bigger you are, comparative advantage you have. And then fourthly, high switching costs for users. But it's not clear, this is interesting, from our analysis, it's not clear yet whether that concentration is actually having negative implications for competition or for consumer outcomes. So we're getting more concentration, but it doesn't necessarily mean people are getting a poorer deal. And I think that is really, really important. And I think one of the biggest questions that we've got is whether this is a stable feature of markets or whether really it's a temporary phenomena. And that brings me to my second point, which is although markets are becoming more centralised, consumers and investors and businesses alike, as we know, they're actively pursuing new models of transacting which are highly decentralised, okay? So, and I see three reasons behind this, and some of the comments been made before. First is the drive for efficiency. Intermediaries, as we know, have for centuries secured a level of trust, as we all know, between parties that allow them to transact and for the economy to function. But that, as we know, added layers, time, additional cost to economic activity. So I think that's clearly driving decentralisation. Secondly, and I think this is a really important, which often doesn't get raised enough, is the lack of trust in many of those intermediaries. That they're less trusted than they used to be. We think about now, the number one risk for many businesses today is reputation, okay? And that, we think about what's happening with the banks, with the rating agencies, with auditors, with major corporates, following sort of big reputational issues, not just the financial crisis. And many of them are still, the trust in business is a big issue. So I think that, people no longer trust the middleman, and they've got a growing preference to deal directly with one another. And it's actually interesting, if you think about it, Bitcoin was launched in the middle of the financial crisis, and the first block out of Bitcoin's blockchain mentions the US bank bailout, which is interesting, right? So trust, I think, is driving a lot of the lack of trust is driving this.
Great.
factor.
So I find
So I
it
was
really
going to say,
interesting.
most importantly, I think technology empowerment, with P2P platforms for some time, blockchain, distributed ledger, I think has been the renewed catalyst for decentralization. So I think for the first time we've got viable, large-scale alternatives to traditional intermediaries, and
Sure.
we're seeing this effect on emerging business models like payments through digital currencies and ICOs. So I think it's just the beginning. And one thing we've just done this last week is launch a blockchain policy centre to advise governments around the world on all the issues related to it. So
There's an interesting parallel, just very quickly, is
Okay, go
that
ahead.
this erosion of trust is actually, in some ways, you could argue, being driven by mobile. Because what's happened is we've moved from an era of brands being dominant to a mobile interface where consumers are now participating in many different brands with a lot more choice and much less brand representation. So I think part of this trust erosion could be driven by that, but obviously there's also many other issues in the press that we see around trust as well.
Sure. And going back to Director Medcraft's point, if I understood you correctly, it sounds like we are, in a certain aspect, we're becoming more centralized, and then on the other side of the spectrum, we're becoming more decentralized. I'd like to get the other panelists' sort of reaction on that. Is that something that is this sort of a sustainable trend, or are we going to reach an inflection point or a convergence point at some stage? Or
I think it's a really interesting point, and you're definitely seeing it. But I think there's probably also a natural tendencies for markets for kind of, there are the few dominant giants, and then you see the rest of the industry kind of trying to organize themselves in alliances that are loose, that work towards standardization, and trying to attack the bigger players. And I think you're seeing exactly the same trends in the digital economy, but because I think global distribution is so easy in a digital setup, I think you see these almost hegemonial players in this space. But if I look at it not from kind of the statistical perspective, but what are some of the things that are actually happening, I think there's a lot going on at the moment, actually around the platform side of things, where people are trying to realize real platforms. And if I look into the B2B space, I just have to look around and say, those platforms actually have not truly emerged. So whether you look at a player like Salesforce that has invested significantly for the past 10 years in building up platforms, inviting other players to use their distribution platform to create wealth for these people, it has not truly taken off and scale. You look at other players, Amazon, Alibaba in China and so on, all trying to build platforms. But I think we have yet to see a player that has emerged that has truly made other companies successful on top of these infrastructures.
It's interesting. I mean, we were actually having a point of view that, in fact, we did some research last year on how big companies were feeling in this world, because this is a world that might seem quite threatening to big organizations. But in fact, the fact that 80% of the world's data is still sitting proprietarily inside large companies, that large companies have, a scale, they have channel, they have a lot of things going for them. They actually have also a lot of expertise inside them. And so we wrote a lot of ideas about what we call the incumbent strikes back. That in fact, in this world, back to your point about, are we seeing genuinely new platforms emerging from disruptors? There are obviously a few very well-known cases like that, but in fact, for the large part, the big organizations are actually still succeeding, particularly if they're seen to adopt what I might call platform-centered strategies. So what we've actually seen our clients doing is very much thinking about how do they use their data to create a differentiated platform for their own business. And in some cases, of course, they believe they could play a part not just as a player in their own right and make themselves better, but that they could be a platform for other players in their industry. Yeah. And so you see insurance companies that want to be the claims processing platform and feeling that their starting point is a stronger one than somebody coming from outside trying to invent a claims processing process from first principles. So I think we're in quite an interesting stage about who's going to win here, or even if it's going to be a win or actually a situation of players coming together, because in many cases, these new incumbents are working with some of the new platform players as part of the ecosystem that they operate in.
So it almost sounds like...
I was actually going to say that, to your point, isn't the fact that, you know this probably better than I do, Mark, that today I think we have something like 16 zettabytes of data worldwide. I think growing to 10 years to, I don't know, 100 zettabytes, but we use less than 1% of that data. I think, that's correct? It's incredible. So, but the second thing I was going to say, in terms of competition, you rethinks everything at the moment, because suddenly, to your point, the days of actually collusion where it was illegal, suddenly it actually makes a lot of sense for competitors to cooperate, which sort of for competition regulation turns it on its head, just going, well, actually we need to cooperate. So, even if you're thinking about blockchain, you want to have interoperability and you want to have single standards, you actually need to talk together. But the other issue we're looking at the moment is you've got to be really careful with platforms, that platforms don't create mechanisms that don't allow open access or restrict. And this is one of the areas where, in fact, there's a lot of work now happening on big tech and the threat of big tech in terms of, basically monopolies. And we're watching very carefully that they don't extract monopoly pricing from what they do. And this is one of the areas we need to watch very carefully, right? That you can be big, but you've still got to remain competitive. That's important.
Yeah, I mean,
I think that's one of the challenging things for the incumbents as well. That is, that I think it sounds simple, like creating a platform and use your data, but I think fundamentally it's sometimes turning the whole economic way that the enterprise works on its head. And in a way, I would love to hear, for example, from you, because I've been, I'm from the technology side as well. So watching, Microsoft's transition into the cloud, where you guys actually came from a very strong, let's say, ecosystem play, and now moved to the play where there are just some different economics on play.
It's completely different.
That's completely transformative.
I mean, the first time I was at Microsoft was in the 90s, and I left in 2000. And I can tell you that before I left Microsoft, we were already talking about how do we shift to a services business away from the type of licensing business that we were. And that is a dramatic shift, right? So now that we've just effectively made that transition, converted how we incentivize sales forces and things like that within the business, and how we charge for product, including things like Office and other products like that. That transition actually enables us to think about openness and open platforms as a value proposition to our business. So as an example, I mean, whether you run SAP on our cloud or you run an Ethereum stack or a Hyperledger stack on our cloud, we're still collecting cloud revenue underneath, right? So that fundamentally actually opens up our opportunity to think about our business very differently, which I think is also goes in line with the past 4 years approximately of dramatic embracing of open source, because it is actually for us, it's no different than how we think about proprietary software.
And you can imagine, obviously, the same is true of even a big old-fashioned 107-year-old company like IBM, which is now more than 60% services. I mean, it's a very big part of what the place does. Clearly, again, yes, although it's also got a bunch of products, massively focused on an open world as well, as we've just spent 34 billion on acquiring something in that space. And I think a very strong sense that actually one of the things about these platforms we're talking about is the issue of openness. Back to your concern about competitive things. I mean, I think and about trust. I mean, a very strong view that the platforms that businesses have to create are going to need to be open. They're going to need to be connecting into an ecosystem of other platforms, actually, and trust in them, and trust in the way that they actually operate, transparency in the way they're applying algorithms, how the data is being leveraged, how relationships and lock-ins with customers are being managed. I mean, we do see this big trend now, and people looking quite hard at really understanding whether when I give my information or leverage my data into a platform, how is it going to be used? So I think we see all of this openness, trust, platform thinking becomes quite pervasive, and it's obviously it's something that it's actually transforming IBM as well.
I think one of the big areas that we've been looking at is algorithmic collusion. What's amazing now is we don't have to talk or communicate. We can just follow your patterns and react. So the whole world of now with data makes actually monitoring fair competition even harder. So it's the reason that we've been advising governments on algorithm. We just published a paper on algorithmic collusion because it's quite interesting. It changes again. We don't talk. It then becomes harder to prove that. The other issue I think we need to watch carefully is to what point does actually somebody like an Amazon becomes systemically important institution, which suddenly the world's leaders start going, well, actually, we need to treat you as actually having global systemic risk. And I think and it's back to that centralization, or at least having one entity becomes an issue. Because imagine if Amazon cloud goes down, hopefully it won't, but it becomes it's sort of new problems of sort of, if you want centralization, having one party, which sort of is the reason why I think, again, decentralization becomes attractive in terms of a risk management perspective.
There's another interest. You brought up transparency. I mean, transparency is going to be increasingly critical because the technology has now outstripped our ability to monitor it as humans. So as we look at AI and quantum computing, the fundamental question is, how do we know that the AI is right?
Yes.
And how do we know that the quantum computing is right? Right? Because what it brings back is something we can't otherwise comprehend. And that's a really interesting challenge and problem to solve, because it's just not something we've ever really...
No, and as a result of that, you find yourself actually starting to use AI to track AI. And some things that we're doing is obviously trying to spot bias in algorithms, and spotting the bias in an algorithm so that you can prove that it's doing what it's doing, you think it's doing, and also start to imagine self-correcting algorithms that start to spot the bias and then start putting it right. So if there's an issue about how, for example, mortgage decisions are being made based upon gender or based upon race or based upon where you live or how old you are, how you start to spot your algorithm is actually operating fairly. That's the sort of thing that starts to become really important in this picture.
It's another area we've been doing a lot of work in the competition area, is actually looking at bias in algorithmic market or in digital markets, because we're starting to see, it's in terms of pricing, you know that if you go to something like Booking.com, they have your pattern of behaviour, and they know that if actually you're always in a hurry, they will offer you a higher price than if you're somebody. And so therefore you run into issues of discriminatory pricing based on your personal data. That's again another area we'll be releasing something pretty soon. But it's a whole new world.
Right. Can I interject here? So, I mean, I think one of the criticisms of private consortium blockchains or blockchain-based consortia is that this could potentially open the door for sort of almost collusion and cartel-like behavior among the participants. I'm just wondering, how would you respond to critics who might make that allegation?
Yeah, I mean, I think you can look at very good examples of existing market participants that are actually functioning in a way where you might have that behavior. In the financial markets, you have DTCC and Euroclear. And these are consortiums of competitors coming together for a common purpose without collusion. So I think there's models there already.
And I think something like that. Sorry, Gert, you go, please. Go.
I think there's something about accountability. I was watching a panel yesterday, and someone made a little bit provocative comparison between the advent of Excel sheets and the advent of AI, and made the point: why should we fear AI? You know, it's basically subject to some of the same kinds of governance that any kind of technology that increases efficiency and so on. But I think there's something around the question around accountability here. And are we maybe overemphasizing the bias aspect of this? Because, there's going to be bias
in people
everywhere, in bureaucracies, no matter your governance structure. So I think it's actually about accountability. And sometimes I think we tend to forget that we have 5-6 billion people living in countries that are fairly low on the kind of Transparency International index. And so the whole trend of centralization actually presents a challenge in these environments, and actually is a challenge for driving accountability. So if we're looking into, let's say, the consortia blockchains, for example, I think there's no fundamental contradiction here. I think it's basically about the governance model that you send up and how you drive accountability in these kind of settings. And whether that is in open public networks or in consortia blockchains, I think it helps having more participants that have their say in, do we agree that this or this happened? And I think that's a common trend.
No, it's interesting, because when we first started the first work on our TradeLens blockchain, which is basically the blockchain for trying to support global trade around the world, which started off actually with a strong sort of founder-led model. And in fact, that founder-led model has now moved into actually not being a founder-led model, but being much more of a neutral model with 33 now going on 50 different participants now, ports, carriers, etc., along the supply chain. And I think actually what you can start to see actually is quite an interesting sort of, quite apart from it being a cartel, actually quite a democratization taking place across these blockchains. And also, particularly in the area of trade, potentially allowing, frankly, parties that were in the past couldn't be trusted to come onto the chain, being able to come onto the chain and actually participate in a way they couldn't do before because they lacked scale. So one of the interesting things about these chains is actually the opportunity to, if they're open enough, to create and something that they need to be open to be efficient. And at that point, you've actually created the opposite of a cartel. You've created actually a genuinely functioning global ecosystem. Yeah. So, and I think so there's both sides to this. I think we're going to see how these different consortia play themselves out. But I think there's a big opportunity, given their underlying principle is one of transparency and trust in the participants. That's generally a good thing. Yeah.
Right.
I was going to say, to answer your question, that's why the OECD, what we do at the moment, say specifically on sectoral sectors and responsible business conduct, we actually bring together policymakers and industry together, and basically in things like supply chains for responsible conduct, where we have certain sectors like the footwear and garment area, where there's a big issue with footwear and garment, with slavery, etc. Basically, we've got that industry, manufacturers, cotton, coming together with policymakers to actually set standards for blockchain development, coming together. So I guess my point is, actually, if you come together with the policymakers and you look at setting the standard for your governance, you then don't run into that issue with suddenly they go, hold on, you're colluding. Right. So you actually need to come together early. So we're doing that in footwear and garment, we're doing it in the extractive industries, and we're doing it in the mineral supply chain and also in food supply chain. So, and bringing the two parts together. And then on a bigger scale, the Blockchain Policy Centre is looking to set up an expert group to look at establishing an overall framework for blockchain policy in terms of, more generically, in terms of things like governance, because governments around the world are actually trying to catch up on this very quickly. So we thought that's something. But I agree with you, getting governance early is good. And also, though, you do need to come together. Sure. You've got to come together in a way that you don't have collusion issues. So all I'd say is you need to not just do it as an industry, you need to involve policymakers early, because trying to just think what they might expect is never the right way to go. No, I can tell you from sitting on both sides of the fence. Yeah.
Great. So we're running out of time a little bit here, so I'm going to wrap up with a quick lightning round here of questions. So my question is, in the context of this theme of the edge of centralization, what will your organization look like in 10 years? Who wants to start?
Okay, well, I'll start by saying it'll look completely different again, right? It's different again now from 5 years ago. It'll look completely different again 5 years again from now. The reskilling of workforces, the way people are going to be working, the underlying processes of the organization, how leaders operate and how we manage the place is going to be completely different. And we're going to be in a network of an ecosystem of partners which we're going to be working with in very, very different ways. Hopefully, playing a robust part in a number of these platforms. But we're into the era of business platforms, and you basically, I think, we have to hope that we're participating sufficiently in those to extract value.
I'll make a couple bold statements. I think that in 10 years we'll be 100% running on open source software. I think we'll be 100% tokenized. And I also think that we will have, instead of having centralized certificate authorities in the industry, that we will have evolved to have a distributed public key infrastructure, that it's the certificate authority. So.
Yeah, Gert? For our part, so we are a platform play company, so I definitely think within 10 years, I will see our role as a very limited in terms of providing actual specific services to the customers that we're serving, to the supply chains that we're digitizing today, and see the ecosystem players representing probably 90% or more of the value that is created in that ecosystem. I think That's a basic premise that we are operating on. And then I think the focus would be on distribution of value, so a little bit to what you're saying, the tokenization aspect. So I think the real key here is how good are you at distributing value in the ecosystems that you are creating? Because that will drive all the incentive. So I think we tend to talk a lot about effectivization, but I think the main value you can drive is the value that today is locked within a few select players in the ecosystems. And if you can share that, you can drive a tremendous change in these ecosystems. And that's where we would be heading for.
Director Medcraft?
I think in terms of OECD in 10 years' time, I would hope that in fact, we are basically advisor to governments around the world, and my hope is that in 10 years we will bring in a lot more of the major emerging economies so that we're actually changed to reflect the transition in the world. So, China, Africa, whatever. So that I would hope that we are towards that. We're just bringing in countries like Brazil, hopefully in the near future. Secondly, I think that if we're an advisor to government, really what it means is that we've got to be relevant. So we basically have to always be on the edge because governments come to us saying, well, what do we do about this? So I think as we are today, even more so, it means we have to actually have really good people and we need to be on top of the topics that governments are going to be asking about. And in 10 years' time, who knows, that I think clearly AI will continue to evolve. There will be challenges on privacy. I think privacy is the big issue today, and I don't think we've even touched the surface on privacy, frankly. So, and then as we know, quantum computing is how far off is that, which completely changes everything. So I think 10 years ahead is difficult to predict. Things move much faster than we always expect. So, but I think one thing will be we'll probably have a lot of central bank digital currencies or a lot of stable coin. And I think that will be incredibly transformational because basically it completely disrupts the banking system as we know it, disrupts prudential regulation as we know it. So I'm very optimistic about the future, actually.
Right. Well, we are out of time, but gentlemen, thank you for this lovely conversation. Very lively and informative. Appreciate everybody for showing up and tuning in. And that's a wrap.
Thank you.
Thank you.